I have no idea what happened there. That is so weird. It just ended the stream on its own. Oh my god, this is so frustrating sometimes. But anyway, screw the videos. I'm not gonna go over those anymore. But let's just continue talking about the markets. I'm gonna allow for a few people to join in. All right, it's good now. It's better. Yeah, God, I was like, I knew something went wrong there. All right. Danny says puts on this live video. All right, so let's talk about the markets. QQQ is down over 1%. I'll maybe do like a separate video going over some of my favorite takes from different people, different analysts and investors, because I was gonna play a couple more videos, but looks like when I do, it completely just froze. It was so weird. It's never happened before. It just completely froze, and when I went over to the chat, it just ended. Like the stream just ended on its own. But anyway, so QQQ is what I'm really paying attention to at the open. We've got another 15 minutes till the market's open here. Is for us to see whether we get a validation at $302, $303 a share, right? So right now, we're kind of like inside this green rectangle, which is a very, very interesting and important area of support to watch for the NASDAQ. And the reason I say that is because if you come back, let's just go over to the 30-minute time frame. You can see that in the past, we have actually seen some validation here at the support. So this right here, very, very nice validation for the QQQs, sitting roughly in the 300s, $302. And then you come back even further. This is from back in May and June, where the NASDAQ once again validates over here, and this has been a resistance for the QQQs as well. So we got rejected here at these levels for the NASDAQ. So once over here, second time over here. So this is going to be a very, very important level to watch for the bulls. If you're looking for any long trades, I'm going to be watching $302 as a potential retest opportunity to see if you immediately sell off at the open. And then of course your stop losses are going to be right underneath this area, right? So you're risking, your risk is going to be obviously very low, because if you do get a breakdown below 302, 303, then unfortunately, in my opinion, there could be some more downside here. But what I'm really going to be looking for is a potential gap fill all the way back up to $307. And that's going to be a potential for maybe 1%, 1.5% move to the upside. That's not going to be making the NASDAQ go up 1.5%, but it's just going to be recovering all that gap that it left on the gap down today. So, all right, so yeah, just I'm back here, guys, so we should be all set. So Azar, I'm considering Meta at around 150s, so that's the level that I will be watching for Meta platforms. Volatility is, we talked about this earlier. The VIX is up to 27. So Miguel says VIX will be at low 30s this week or the next, buying then. So yeah, 30, 35 levels is going to be a level that, we're patiently waiting for. If it gets up to those levels, then of course I'm going to be a net buyer at those levels. And right now we're just over 27 at the moment. So 13 minutes left. Let's just quickly do our poll here as well. We also had a poll going on earlier, but I don't know, for some reason, some days things happen here. So green, red, and we're going to do flat. So make sure that you do vote. And we'll see where the sentiment is overall on the markets. The 10-year yield is up to 1.6% in the green right now, just under 3.1% at the moment. And of course, we talked about oil prices as well, getting up to over $94, $95 a barrel. So definitely pushing higher at the moment. So let's just open up our stocks as well. We'll take a look at where individual stocks are trading at, and then of course, we'll switch over to the indices here in just a minute. So Apple down about 1.2%. We got AMD down over 1.3%, Nvidia down over 1.6%, and then Tesla is down almost 2% at the moment, just trading under $283 right now. It has gotten bought up a little bit from 280, so it has pushed up, almost 1%. But that intraday support is going to be sitting roughly at around 280 for Tesla to see if you actually do get a breakdown below this level. And for NVIDIA, that level is going to be at 160, just under 160 right here. And then of course for Apple, we've got a very strong support for Apple in the 150s. 155, I think we've got that 200 SMA sitting for Apple roughly around 160. So 160 is going to be that level. So Andrew says huge rally today. Well, we'll see intraday, what happens, because again, this is one trade idea that we can potentially look into where if you get so right now we're expected to open right here. Let me just point that out. So we are expected to open here for the QQQs. And what that does is that leaves this huge gap to fill, right, on the intraday. That's why I've got this unfilled gap written over here. So when we open here, $302 is going to be that potential support that I'm waiting for or watching. If you get some intraday sell-off here, right at the open, and then a potential reversal opportunity to move up and fill that gap on the QQQs for the day. That's the one scenario, and the other scenario could be. The other scenario is that we immediately push higher at the open, start to push up, but then got rejected, right? Get rejected at $305, and then start selling off even further, and then start to break down, and that momentum on the downside continues for the markets. That obviously is going to lead to some more potential bearishness intraday. So those are some things to watch out for here. So Michael, when am I rebuying? So I will really be looking at, again, like I said, volatility is going to be a big indicator for me. Oil prices are going to be a big indicator for me. Valuations in general are going to be a big indicator. And of course, technicality, looking at RSI, MACD's, percentage of stocks that are trading above, below their moving averages. So there's a lot of different indicators that I'm really paying attention to when it comes to when do I want to deploy cash back into the markets. And I'll start with selling cash secured puts. I'm not going to be straight up buying stocks, but I'll be looking at selling cash secured puts. So, all right, let's see here. Andrew says push markets to all-time highs. That's going to take a long time. I mean, like I said, the markets are not going up there anytime soon because it's still going to be, a 30-40% move back up to getting up to those levels. So it's going to take some time. And, as Aswad Demotran professor mentioned earlier, that I think the market just got a little bit of a reality check on Friday that the market can collectively be wrong. And I think that's what happened, right? Market collectively just mistimed or misjudged the Fed's pivot that was the entire reason why the entire rally was built on, right? That 6 to 8 weeks of rally that we saw was built on the idea that the Fed might pivot, which Jerome Powell kind of ruled out on Friday. So let's take a look at Amazon as well. We'll go over a few more stocks here before the open. So Amazon is starting to fill in this gap also. So this right here is a gap that we left after the earnings. So we're coming down. Support level is going to stay put in the 126, 125 levels for Amazon. So wouldn't be surprised if we do come down to those levels and then get a little bit of a bounce from that support area back up higher. So where was the resistance? So resistance now, in my view, I think it's going to be sitting. Let's take a look at this chart as well. I think Amazon done some analysis on this one. So we're expected to gap down a little bit. So, intraday, I'd be paying attention to 129. That is a potential support here, which has been previous resistance for Amazon quite a bit. So we've got a double resistance there for Amazon. So 129 is going to be that support. Let's see if we get a bounce off of those levels. And then resistance, all the way up to 135 to as much as 140 for Amazon. So let's talk about SPY as well. Let's see. So QQQs, and then, all right. So this right here is going to be Spies Analysis. So right now we're gapping down to 402, right? $400, very, very important psychological support to see if you actually get a bounce there. But the next level to really be paying attention to is going to be $398, so closer to $400, because that is a level where we've kind of gotten a little bit of a bounce here. Again, these are 15-minute, 30-minute time frame charts. These are very, very shorter time frames. Support, resistance there. So that's really going to be the level to pay attention to intraday. We got a little bit of a bounce there on July 28th as well. So that is going to be that support level at $398 to watch for SPY. So 7 minutes left for the markets to open. Today we don't have a lot of economic reports or earnings either. All we really have, by the way, all of this, I went over in my other live stream, which for some reason crashed. But I mean, it seems pretty appropriate. Like with the markets, I mean, live streams are also going down. So, but earnings wise, also we don't have lots of companies that are reporting today. But then tomorrow I'll go over CrowdStrike and ChargePoint, and then of course housing market index and Case-Shiller home price index. All that comes out as well. So yeah, and that's what it comes down to, right? So there's gonna be plenty of buying opportunities in my opinion. There's gonna be lots of time dollar cost average, because I think 2022 and even some time of 2023, we're gonna see a lot of volatility. We're gonna see a lot of back and forth. Inflation is one thing that is or has been and will be our key leading indicator. I've said this time and time again: inflation. I cannot put enough emphasis on inflation and why that is going to be so important. Nothing really else matters as much as inflation. Everything else is manageable, right? Employment, GDP growth, earnings, and all that stuff can be managed over the long term. But inflation is something that needs to be controlled and brought down ASAP. A lot of it obviously has to do with oil prices, food prices. So that is why oil has been such a big part and big focus of our analysis, is that where crude oil goes, will probably result in where inflation goes in the future. So that's why it's very important for us to understand, because the entire Fed's thesis on being data dependent where interest rates go is based on oil, or inflation I should say. It's based on inflation. So, and then of course what Fed does with interest rates affects the overall markets, the bond market, the commodities market, the equity markets. So yes, Alex, please don't forget the geopolitical issues such as China and Taiwan. So yeah, those are also really important here. What price I will be buying Amazon and InMode and AMD now. So Amazon, I would be interested in the low 100s, as I've said before. So this right here, the green rectangle right here, is something I would be very interested in picking up, maybe more Amazon shares. AMD, same thing, the green rectangle. So green rectangle, when I mark them, is usually like kind of in line with what my intrinsic value is for that stock. So for AMD, we're sitting at $90 right now, and my intrinsic value is sub 80, right? $72, $75, closer to those levels is what I'm really interested in for advanced micro devices. And for InMode, I'm really paying attention to like sub $25 a share, right? So this right here is going to be that strong area of support to watch for InMode. So that's going to be those three areas that I'm really paying attention to for those three stocks. So, all right, let's see. All right, yeah, so if you have any questions on any specific stocks, I'm happy to go over, but let's just switch over to the actual indices. And again, we'll pay attention to these two charts here. SPY, again on the 15-minute, 30-minute time frame. So Puneeth, yes, NXPI is next. I promise. I just got done with C limited analysis today. So if you haven't already, make sure that you do check out that video. But yes, NXPI is going to be next that we're going to be looking into. So, so how do you personally really think the market will go today, red or green? So really, I mean, with that type of prediction, it's like a 50-50, right? I mean, there's not really any basis as to, what I would say red or green. What I'm looking for is certain levels, support and resistance, and if they actually get broken, then the selling pressure or the buying pressure can only accelerate, right? But so what I'm really paying attention to intraday is $302, $309 right here at the bottom end of this rectangle, to see if we actually come down to get a retest of this level. That's where the risk reward intraday is going to be the best, in my opinion. And of course, if you potentially get a rebound there to fill that gap in, all the gap that we're just leaving behind right when the market opens. And of course, we could get up to 307. That's going to be the entirety of that gap we fill in. All the way up to $308 is going to be that next resistance. So that's going to be the plan, especially on the intraday basis. And then of course for the SPY, we also went over certain levels to watch. But let's see where we are with the poll. So 67% expecting the markets to be red. Make sure that you do vote if you haven't already though. So yeah, 67% expecting the markets to be red, 22% expecting the markets to be green, and 11% flat. Again, not coming as a surprise because again, the markets are pretty brutal right now. So we'll see what happens intraday if we do see any buyers bite, or if the bears have pretty much have us on the hook, and if you got to be ready for the punches here. Arnold, good thing you're awake, man. I actually didn't end the stream. I don't know what happened there. So all of a sudden it just crashed the whole stream. Like I said, it seems pretty appropriate, right? With the markets going down, streams also going down. So Lenji, yes, can you explain the gapping down and why it needs to be filled? So 9 out of 10 gaps usually do get filled, if not immediately, but eventually. So that's kind of like the idea that intraday, okay, we're getting a big gap down. We're already so bearish pre-market. Intraday, we might see if there's any buyers to step in to push us back over $305, $306. So that's the idea. Again, 9 out of 10 gaps do, statistically speaking, do get filled. Maybe not immediately, but eventually they do. And right now for the QQQs, we do have some gaps here, down to 295, as much as 298. So there's another gap that we kind of left from back in July that we haven't really come down to. So that's also a possibility on the downside. Yes, and volatility is going up. Yep, so we talked about this, up 6%. But let's see where the market opens here. There we go. We are open for business. S&P 500 down 83 basis points, opening up just over 4,000. And then we've got the NASDAQ here opening down close to 1%. Here, down to 12,000. So S&P just opening, validating 4,000 so far, just over 4,000, and the NASDAQ is just over 12,000, and the Dow is down over 262 points at the open here. So this is going to be the plan here. Is basically what we're watching is to see if it actually sees some intraday weakness to come down to 302, validate this level, and get a little bit of a bounce from that level, and start to kind of fill this gap in. And this is the entirety of that gap. I don't know if you guys can see this, but this is the white gap that the QQQs have. So we'll go over to the 5-minute charts here. Yes, ding, ding, ding. All right, so, and let's take a look at some stocks here as well. So NVIDIA getting a big spike at the open, back up to 161, 162 here. Tesla also pushing up 283, still down about 1.5% though. And AMD here just down about 0.5%, back over $90. And we got Apple just down about 1.2%, pushing up to 161. So now we're starting to fill in this gap. That's good. We're down to this much from Friday's close. And we'll see if we actually do get a breakout over 305. That's going to be the level to watch now. That's pretty much the range, right? We're opening right in the middle. We'll see if there's any buyers stepping in to see a breakout over 305 or a validation of 302. So Caddy, what VIX level is good to start buying 30, 40, 50? So yes, anything over 35 is what I'm really interested in. That's where I would be a net buyer of stocks. So again, right now we're nowhere near close to that level. We're at 27. Again, it's not just the volatility. There's a lot of other things that you gotta combine with the volatility, such as valuations, technicals such as RSI, MACD levels, how oversold the markets really are, what percentage of stocks are trading above or below their moving averages. Of course, then we talk about the macroeconomics as well with respect to where inflation is, what type of catalysts are coming up. So there's a lot of different things. So I wouldn't necessarily isolate this one index that, okay, just because the VIX is over 35, it's time to buy, but it's also other things such as the ones that I just mentioned. All right, so we're getting up to more and more of this gap fill. So we're definitely pushing higher here, only down 70 basis points at the moment. Getting up to this level of 305.44 to see if you can get a breakout above this level in the first 15 minutes. 50. It's possible. I mean, you'd be surprised. 50 is also possible on the VIX. I mean, during the Great Recession, it actually got up to as much as 80 or 90, right? So if you come over to the monthly chart on the VIX, and you look at, well, even during COVID, it actually went up to as much as 86, right? This right here was back in 2008. It went up to 96, right? So the fear index, it's called the fear index for a reason, and it's not unusual for us to see levels of 80, 85 levels. So 50 is just like, just like another Friday for the volatility in some days, in some weeks. So it's possible. I mean, it's not an unusual scenario where the VIX spikes that much. All right, so QQQs right now just kind of battling through at 305, 305.50, starting to kind of fill this gap a little bit more and more. We'll see if you actually do get a touch point here at $307. 2 times in 14 years is rare. Yes, it is rare, but that's for 80 to 90 levels, right? 50, I'm sure you can find more times when we have gotten up to 50 for the VIX. So we're definitely coming up to fill this entire gap on the QQQs. We'll see if we actually continue. We need to get up to as much as 307 to fill the entirety of this gap on the NASDAQ. And energy, oil, also getting a bit of a bounce here at $90. So we actually have shifted a little bit. So earlier, this right here was the entire pattern for oil on the 4-hour chart. We talked about how many touch points oil was having. I think I spoke a little too soon. We were too excited about this downtrending channel where oil was just consistently making these lower highs and these lower lows. So we were just on this constant drop. This right here should have been the next support down to sub $80, but instead it kind of reversed course. It started trading sideways a little bit, and now we're starting to kind of make these higher highs and higher lows. That's the last thing, obviously we wanted to see, but resistance still stays put here at 95. So we'll see if you actually do get a breakout above 95 for crude. That is going to be very, very critical for for oil. All right, so we are up to 306 now. NASDAQ only down 40 basis points. And the Dow is still down 64 basis points. So most of the buying seems like has been in tech. Tech is starting to push up a little bit more than the Dow Jones. NASDAQ is only down 0.5% now. And we got the S&P 500 also only down 0.5%. With NVIDIA up to 162, we got Apple 73, 74 basis points, and Tesla also pushing up quite a bit here. Yes, I think that's a good point. I think that people understand that just because oil prices are going up doesn't mean that that's directly affecting inflation. But what happens really is that oil affects freight costs, shipping, logistics, all that stuff. So overall prices for other goods and services also go up, which thereby affects inflation overall. So, obviously everything that we do requires oil, right? It requires that oil is one of the most important commodities in the world. So obviously if oil prices are going higher, the cost of everything else also goes higher. So, but yes, that's a good reminder. That's a good point. So almost at $307. Seems like this dip is starting to get bought up, and we are filling that gap here entirely. But what happens after we fill that gap should be really interesting intraday. But starting to push up really well. We've got the S&P here. Still nowhere near close to $405, but that is going to be that level to watch on the SPY at the moment. We are seeing momentum on the 5-minute time frame, but $405 is going to be that level for SPY. So that's the gap, right? Needs to come to 12,140 on the NASDAQ. All right, so Netflix pushing up 1.3%. We are seeing some momentum here on the day. We got Mara up 4%, despite the sell-off in Bitcoin over the weekend, which is interesting. Yeah, so many alerts are going off. And then we've got Fubo. So Miguel says we'll end up green today. Powell's scare gone. Yeah, I mean, we could certainly push higher intraday, but I wouldn't necessarily say that Powell's scare is gone. What I would say is that Powell more or less reiterated what he's already mentioned. So there wasn't really anything new about what Powell mentioned, right? He was hawkish, he was still hawkish. But again, if you look at the bigger picture, we have to understand that inflation is not down to their 2% target yet. And until it gets down there, they will continue to be hawkish and be aggressive when it comes to interest rates. So again, looking at the bigger picture here, we have to understand that there are still things that are yet to improve on in the markets. So what I would really pay attention to is, okay, we filled a little bit of this gap. Now it's going to be really interesting whether we get a rollover, because usually when the markets gap down or gap up, they'll push higher, sell off to fill that gap, and then the real trend starts to form in, and the direction for the market starts to take form. So so far we have come up to as much as $306, almost $307, small gap there. So now it's going to be very interesting whether we get rejected or start to push really back down. All right, so Tesla down 77 basis points. Apple, Microsoft, AMD also are 4 or 5 FANGMAN stocks that are selling off. Netflix definitely pushing higher, 1.7%. Amazon, Google, Meta also pushing up. And then we've got, on the ones that are down, Roblox, Take-Two Interactive, LABU, ZIM, all of them here down about 1 to 2%. So not as aggressive as Friday, obviously, at least not yet. And then the ones that are green right now, like I said, Marathon pushing up 5%, Fubo, DocuSign, Neo, Alibaba is pushing up, so some Chinese stocks up over 1.5% right now. And then we got Tattoo Chev, Roku, Hood, Upwork up about 0.5% to as much as 1%. Upstart is slightly down as well. So seems to be a very, very flat day so far. There has been some intraday momentum, but so far it seems to be a very flat day for the markets. And we are seeing some momentum kind of fade for the market so far. And just within this time frame, I mean, we've got a big volume bar somewhere between $307, $308. So you can kind of see that over here, right there. So that, you know, most of the traded price, second most, I would say. Yeah, second most traded price over the last, since 10:30. So over the last 24 hours, so from Friday's 10:30 till now, was about $307. So that's going to be a very important level to really watch whether the NASDAQ kind of breaks out or not. And, inside this green rectangle, again, let me just go over to the 30-minute time frame. Inside this green rectangle, there has been buyers before. There have been lots of buyers before. You can see that over here. You know, we kind of got a rejection, sold off. Buyers stepped in exactly at 302. You come back from May, June. Again, lots of buyers stepping in here. This was June's validation. This was June 7th. This right here was June 1st. This was the intraday rally that we saw after the buyers stepped in. So we actually rallied 3.5% on that day. And this right here was the same exact green rectangle validation from back in June 7th, 2.69%. And previously, of course, this was a resistance for the QQQs. We got rejected there back in May. So right now, it's not surprising that we are seeing a lot of buyers step in. And the next level really is going to be 307, 307, 308. Almost failed. We're like literally there. QQQ is almost coming back up to fill this entire gap after the gap down. So we're pretty much going to be break even now. So I think we ended the poll, right? All right, 66% still expecting the markets to be red, and we are about 15 minutes into the open. And 23%, you obviously can't, I don't think you can change the poll answers here, right? I don't think you can. But I'm going to end the poll now. Almost 400 votes, and we are good to go. By the way, make sure that you drop a like as well. 504 people, 542 people watching, only 100 likes. Come on, I'm sure we can do better. So make sure that you tap the like button. So yeah, Tesla now at 286, almost turning green as well. So very strong momentum coming in. Apple's also getting bought up here. Microsoft, AMD also pushing up very much. Netflix is up 2%. Netflix having, great day. 2%. There was some catalyst on Netflix. All right. So Netflix intends to charge $7 to $9 per month for its new ad-supported plan. So, we were expecting some news by the end of this year. They were going to be releasing that. And of course, right now they are charging $7 to $9 per month for its new advertising supported tier, which of course is going to be, big for Netflix because on two different things, right? So we've got revenue coming in for people who want to sign up for $7 to $9 per month based on their ad supported tier, and you've got businesses paying for getting access to over 200 million subscribers that will be watching on Netflix every month. So that's two ways they're going to generate revenue at minimal cost. They literally have to do nothing. They just have to create a new tier, market at $7 to $9 per month, and run ads on it, right? So it's, in my opinion, I think it's a big proposition for Netflix in terms of revenue generation. But again, the question really becomes how many people will pay for that ad-supported tier. So, yeah, I think that's the pricing obviously is gonna matter very much. I don't think $7 to $9 is gonna be for. Really depends on what geography they're targeting with $7 to $9 per month for ads. So current most popular plan, which costs $15.49. I'm pretty sure that one $15.49 is in the US, $15.49 per month. Correct me if I'm wrong, but that's pretty much. I think that kind of seems like a North American market rate of $15, $16 per month is what they charge. But I think for Asian countries, it's a lot lower. I think it's closer to $10 per month is what they charge. So, all right, let's come back to QQQs. This is, again, a resistance area. We've got lots of volume by price here to watch. We almost filled that entirety of that gap. Now, like I said, after 15 minutes, after 20 minutes, the real trend will start to form, the real intraday direction. And we'll see if you actually roll over back down to 302 or if the NASDAQ can continue to fill in this gap and potentially even reach as highs of 308. $308. I think we have gone rejected at that level before. So, that's where we are. U.S. 10-year yields still pushing up 3.1%. The T-bond rate, which, as what Demotron also mentioned, is well over 2%. And the 5-year implied expected inflation numbers are now sitting at over 2.5%. So, market's expectation is that inflation will roll over to 2.5% in 5 years' time, maybe not as quickly, but they are expecting that inflation will eventually come down. And eventually it will, right? The question really is, how much pain do we go through from now until that day, right? So we know that in the future, there's going to be a day where we get that CPI print and year-over-year inflation is going to be down to 2% or lower. And month over month, we're actually going to be seeing a little bit of a decline. Right? We know that. It's going to happen. But it's just how much of pain does the economy and the markets go through between now and that date in the future, right? That's what everyone's trying to assess. So oil now breaking above $95. Maybe not very soon here, but definitely breaking out crude oil once again. So, yeah, not something that I wanted to see, but here we are. Crude oil once again on the move. So the Dow stocks, if you take a look at Dow 30 here, Travelers, we got American Express, 3M, Merck, Caterpillar, Johnson & Johnson, all of them down at least 1 to as much as 2%, selling off. And the only companies that are pushing higher are energy. So ExxonMobil is up 2%, and then Chevron also pushing up 84 basis points as oil prices continue to push higher. So, Dow Jones definitely selling off. Tech getting bought up here, at least in the first 15 minutes. But like I said, the real well, the real trend will now start to form here after we fill that gap. This is the 1 minute chart. I'm just going to keep it there. So Tesla, look at that. Oof, what a drop here in the first. Well, we took three 5-minute candles to push up to 287. Just one 5-minute red candle to bring us back down to pretty much where we opened almost. So back down 1.24%. So I mean, what does gaps mean? Okay, there was no transaction at that range price, but what does it mean? Well, it simply means, I mean, the market overnight gapped up or gapped lower, right? So pre-market trade pretty much went at a higher or a lower price. So we pretty much left a gap. We have no trading activity, no trading range, no price discovery at those levels. So as I was saying earlier, I mean, you know, a lot of times, 9 out of 10 times, gaps do eventually get filled. Maybe not immediately, but eventually they do. And of course, right now we're, you know, on our way to filling up the gap down that we had, significant gap down from Friday when the markets were down over 1.5, closer to 1.2%. So we saw a little bit of a rally here to fill majority of it. And now we're starting to kind of roll over a little bit. But we're still inside the context of a very strong support, at least on a 15 or 30 minute time frame. So So Arnold says buy BBBY, Bed Bath and Beyond. So I was actually thinking, you know, honestly, I was thinking about maybe doing a full fundamental analysis on all meme stocks. Literally like do a fundamental, like a genuine fundamental analysis on revenues, earnings, cash flows on these businesses, on AMC, Bed Bath and Beyond, and kind of help us understand what that intrinsic value is going to be for these companies. If anybody's interested though, like, because I know there's a lot of interest in these companies, and they've mostly been traded. Puneet says stop wasting your time. But yeah, so I mean, for AMC, I might consider, maybe not for Bed Bath and Beyond, but for AMC, I might consider doing some analysis on it. But Puneet, don't worry, NXPI for you is next, so we'll get your stock out of the way first before we get to other companies. So Alex, I've actually shared the full analysis. So I've actually done full analysis on that as well. So you can check that out on the Patreon. Earnings. Kevin says, what earnings? That's right. Obviously, no earnings. All right, so more or less a consolidated day. Not a lot of price action, at least not for now. We're seeing the markets getting bought up a little bit here at the open, but now just starting to trade sideways a little bit. Yeah, so Dexcom, I'll add this to the watch list as well to maybe do some analysis there in the future for that company. But I also want to go over percentage of stocks that are trading above below moving averages. So let's see here. So S&P 500 stocks now trading above 20-day moving averages come down to 17%. And that pretty much, you know, dropped very, very quickly. I mean, you've got just a few days ago, August 19th, you've got this indicator sitting at over 81%. And then just in a few days, of course, it drops down to 17%, right? So over 83% of stocks now trading below their 20-day moving average. When it comes to S&P 500 stocks trading below their 200-day moving average, you've got 67%, 66% of stocks trading now below their 200-day moving average. We were to as much as 50%, but now that number has gone up a little bit after this sell-off. And this right here, 11 to 10%, this is another indicator to really pay attention to. You know, you'll have these things kind of work out in together, like they'll play out together. If the volatility goes up to 35, 40 levels, then you've got this indicator, S&P 500 stocks trading below their 200 SMA come down to 11%, right? So this will also be at a very low level. The RSI, the MACDs will come down. So those are some of the signals that I'm really looking for when I do the dollar cost averaging, when I start to become a little bit more aggressive and I'm buying just, you know, back in the markets. Neeraj, yes, I'm using TradingView right now. Yes, TradingView is the one that I use. Ankur, yes, I have done valuation analysis on NEO based on a price to sales multiple because the company has no earnings. So I've actually done the analysis on price to sales basis, but not on price to earnings or price to cash flow because, again, those are not there yet for NEO. So Moderna, let's take a look. Moderna, we can also take a look. Moderna is actually one of the, I think, top performing stocks in the S&P 500. Maybe not for the last 1 year, but it has done really well. I think in the last 3 years or 5 years. I mean, of course, it's gone from $18, up to $145. So in the last couple of years, I mean, the stock's gone up 700%. But right now, we're kind of, coming down to that support again. 117 is going to be that level to watch as a very strong support. I mean, it's got a very interesting potential head and shoulders pattern with a couple shoulders here. So we got left shoulder, potential head here, right shoulder, and then a big neckline sitting right there for Moderna, and a resistance here as well. So this is going to be that level to watch as a resistance at 188 or $189, and support level is going to stay put at 117. So we're very much range bound for Moderna right now. 117 is where I would be looking at for a potential next swing trade opportunity for this company, because we've just been kind of bouncing off of these levels. Yeah, I mean, it could be seen as an inverse head and shoulders as well if this is what you're referring to, kind of like this neckline, potential left head, right, pretty much a shoulder, and then a right shoulder forming right now, if that's what you're referring to, Panin. So CRL, financial statements look acceptable. It's going to be Charles River. So, all right, let's take a look here. CRL. Ooh, I like it. I like it. I mean, it's got, overall, we've got very consistent, strong revenue growth. We've got strong earnings growth as well. If you take a look at free cash flows here, there we go. You've got very strong free cash flow growth for the company. Shares outstanding have been very stable at 4650 million. So this is also, I like it. I like what I'm seeing right now. Price to earnings, 24 is a little bit on the high side. Again, depends on earnings growth. Price to sales under 3, price to free cash flow at 16, enterprise value to EBITDA 14 levels. 6% return on assets is low. We like to look for this number above 10%. Again, return on invested capital is also lower, only at under 8%. Gross margins 32%, net income margins at 11%. So those are good numbers. Current ratio is over 1.3. All I need now is cash over debt, pretty much negative net debt, and we are good. I can definitely do some analysis on this. All right, so we've got almost $3 billion in debt for this company with under $250 million in cash. So definitely a very, very strong positive net debt. And it looks like the debt has actually grown faster than the cash on the balance sheet. So that would be the only issue. The couple of issues that I would spot right off the bat would be the valuation seems a little bit on the high end, 24 times, 25 times earnings. Again, depends on the earnings growth. So I would take a look at the PEG ratio and then the balance sheet as well. But everything else, does kind of meet some of those criterias, but not all of them. I'll add this to the watch list, and we can definitely do some more analysis on this in the future. And right now, support, I would say, is sitting roughly at about $201. Got a little bit of support there, validation here, and just last couple of times, we have validated that support here as well for CRL. So Hubs, I've actually done a video on HubSpot as well. You can check that out if you haven't already, but I have definitely done a video on HubSpot in the past. And but yeah, I'll definitely add more of these companies. I know there's a lot of companies that you want me to go over, but I'll definitely add more of these to the watch list so we can continue to kind of keep up with them and do some more analysis on these. So UEC, Uranium Energy Corporation, I'm expecting that one to be a very commodity oriented play. So LEU is going to be centrist. So again, I'll do some more research on these companies and see if they're definitely worth looking into. They're the new oil companies, but green look here to date gains. Okay, Marcus, I'll definitely check those out when I have the time. But I still need to get through like a couple more analyses on individual stocks, and we'll definitely get around those companies as well. So Ash says oil might close the month green, not good for inflation. Yeah, so if you come over to the monthly chart, we're like almost there. Another 3% move before the month closes out. We've got today, tomorrow, and Wednesday, so 3 more days. And we've got 3% move on oil prices, and we're pretty much break even on the month of August. So look at how much we pretty much got bought up here in crude oil prices. I mean, this is where we closed at $98. At one point, oil was down over 13% on the month, in the month of August, and now we're only down less than 3%. So very, very strong long wick here on the downside. I mean, winter is also coming up, so that might have something to do with how much momentum we've seen for oil overall. But yeah, definitely not great for inflation and the future prints that we might get. Swapnil, tell us about Enphase. Done analysis on Enphase as well. Ankur, thank you so much. I appreciate that. I'm glad you enjoyed the analysis there. But Enphase, I've actually done a video on them before, so you can check them out. This again, risk reward basis, not touching this at all, because we've got a significant negative divergence playing through. We got the MACD selling off, and the valuation's really, really high too. So just from a risk adjusted standpoint, it's just not really worth, in my opinion, at these prices, considering how much it's already pushed up over the last 6 to 8 weeks. So that's going to be Enphase. And then looks like QQQ's rolling over a little bit. We did get a couple candles, very green, pushing up to as much as 307, but now we're starting to kind of roll over back down. It's going to be very interesting for us to see if 302 gets a little bit of validation there at that support, or if we kind of break below that level. But that's going to be a 77 basis point drop. That's going to put us down about 1.5%. That's about as much as I could expect the QQQs to be down after the Friday's brutal sell-off. So like a star, thank you so much. I really appreciate it. Leighton, no love for NEO. What? No, we did talk about Chinese stocks earlier. We talked about Chinese stocks very briefly. I mean, PDD is up 19% on earnings. And NEO is up over 1.4%. I mean, we've talked about NEO. I've done the technical analysis on them as well. I'll probably do the market update and technical analysis on NEO, Tesla, and Palantir, the ones that you guys really like. I'll do those as well. But yeah, we'll take a look at NEO shortly. But Robinhood, let's see how the hood is doing for this company here. Just up over 43 basis points, but it's been obviously selling off since it's gone public, down a little bit over 90%. Yeah, I've never really analyzed on a fundamental basis. I've actually not done a single video on Robinhood before. So maybe I can do some analysis on this if, of course, people are interested. But it's just not going to be for me personally because, numbers just don't look that good anyway. And Robinhood, I really see this company as being bought out. I don't know. Robinhood, I don't expect this company to be a big player. It could be. I could be wrong, but I see it more as a company that gets bought out by another fintech company in this space. So we've gotten some rejection here at $10.98, $11. Yes, Puneet, I've done several analyses on DocuSign. I've done a lot of analysis on DocuSign before. If you simply search DocuSign money vesting, or if you search DOCU, the ticker symbol, DocuSign money vesting, you should see a lot of videos up there on that. And that's, that I encourage for most people here if you are looking for any stocks. Well, first of all, you can check under our stocks under 30 minutes playlist. I think we've got, hundreds of videos in there for different stocks you can check out. But then you can also go to the search bar and search money vesting in the different stock. And if there's a stock that I haven't analyzed, then definitely reach out, message me, and just like you guys are talking about in the live stream, and then we can put them on the watch list to analyze more. But 10.98, close to $11 is going to be that resistance for Hood. So Alex says, wow, it is coming down after filling that gap. Kenny, you're a genius. Yeah, so let's take a look at QQQs. Yep, so really, we went up, filled that gap, and now we're starting to see a little bit of, pressure kind of come in and roll over. So again, inside this green rectangle is really going to be what's important. But we'll continue to pay attention to that as well. So thank you so much for joining in, everybody. I really appreciate it for tuning in. And as always, make sure that you drop a like and, of course, subscribe to the channel if you are tuning in for the first time. So thank you so much. As always, make sure that you drop a like. The Patreon, the Discord link is going to be down in the description below if you want to join. A couple more days until that 16% discount does expire. So link's going to be down in the description below and also pinned, I think, somewhere on the chat. But thank you, and I really appreciate it. Hope you all have a great rest of your day. And if you have any questions, reach out to me on Discord or leave them down in the comments below, and I'll definitely get back to you as soon as possible. So happy investing, and sorry for the stream crashing earlier. I just don't know what happened there. But pay attention to earnings, and of course the big week's going to be employment later this week. So that's going to be in focus for this week. So thanks again, happy investing, and I'll see you guys